Good evening friends, you're most welcome to Think Eyes channel. Today we are going to discuss India Yearbook 2022 gist, which is written by GSS Core. Our topic is finance. Let us begin the topic. Computer Assisted Scrutiny Selection CASS. Income Tax Department has been leveraging data analytics and risk assessment for promoting voluntary compliance and deterring tax evasion. The department has been implementing Computer Assisted Scrutiny Selection CASS for selecting cases for scrutiny or audit. The suggestions received from field formations and the outcome in cases selected in prior years are reviewed by a cross-functional committee including representatives from assessment, investigation, intelligence, international taxation, transfer pricing, risk assessment systems to refine the scenarios and parameters. Non-filers monitoring system NMS. The Income Tax Department has implemented the non-filers monitoring system NMS, which assimilates and analyzes in-house information as well as transactional data received from third parties, including statements of financial transaction SFTs, tax deduction at source TDS, and tax collection at source TCS statements, intelligence and criminal investigation I and CI data, etc., to identify such persons or entities who have undertaken high value financial transactions but have not filed their returns. Inside systems, an integrated data warehousing and business intelligence platform has been put in place to enable ITD Income Tax Department in meeting the three goals, namely to promote voluntary compliance and deter non-compliance. To promote voluntary compliance and deter non-compliance, to impart confidence that all eligible persons pay appropriate tax, to impart confidence that all eligible persons pay appropriate tax, and to promote fair and judicious tax administration. Income Tax Business Application. The Income Tax Business Application ITBA project commenced in 2013. The objective of Income Tax Business Application was to enable all internal business processes so that officers and staffs are able to increase their efficiency by bringing information and work at a single place for decision making and reduce drudgery in reporting, correspondence, and internal approvals. TDS reconciliation, analysis, and correction enabling system TRACE or TRACES. TDS reconciliation, analysis, and correction enabling system TRACES. TRACES is a web-based application of the Income Tax Department that provides an interface to all stakeholders associated with TDS administration. Going paperless. By procuring digital signature certificates for all officers, it is being ensured that any message or letter or notice or order can be composed in the module, converted to PDF format, which can be digitally signed by the officer and sent directly to the taxpayer through email. Simultaneously, all papers submitted by taxpayer would be converted into electronic form in ITBA. New initiatives. Transparent taxation, honoring the honest. A transparent taxation platform titled Honoring the Honest was launched in 2020. The platform comprised faceless assessments, faceless appeals, and taxpayers' charter. The reforms are part of the government's attempt to honor honest taxpayers of the country and to make the tax system seamless, faceless, and painless. Taxpayers' Charter. The Taxpayers' Charter provides for responsibilities of the Income Tax Department towards taxpayers and also lists duties of the taxpayers. Faceless Appeal Schemes 2020. Vivad se Vishwas Scheme. A large number of disputes related to the direct tax are pending at various levels of education, from Commissioner Appeals level to the Supreme Court. These tax disputes consume a large part of resources both on the part of the government as well as taxpayers, and also deprive the government of the timely collection of the revenue. With these facts in mind, an urgent need was felt to provide for resolution of pending tax disputes, which will not only benefit the government by generating timely revenue but also the taxpayers it will bring down mounting litigation costs and efforts can be better utilized for expanding business activities. With these facts in mind, an urgent need was felt to provide for resolution of pending tax disputes, which will not only benefit the government by generating timely revenue, but also the taxpayers as it will bring down mounting litigation costs and efforts can be better utilized for expanding business activities. Direct Tax Vivad se Vishwas Act 2020 was enacted in 2020, under which the declaration for settling disputes are being filed. Depending on the type of the pending dispute, a proportion of the total tax, interest and penalty demanded needs to be paid under the scheme of for the settlement. Improving the ease of doing business for startups. To provide a cohesive ecosystem to startups, various taxation related issues have been addressed. A dedicated startup cell has been constituted under the member of the CBDT for sorting out the grievances and taxation related issues of startups. Document Identification Number DIN, with a view to bringing greater transparency in the functioning of the tax administration and improvement in service delivery. All notices and orders of income tax department are generated electronically on systems with a computer generated DIN. Thus, all communications to the taxpayers by any income tax authority relating to assessment, appeals, orders, statutory or otherwise, exemptions, investigation, penalty, prosecution, ratification, approval shall be issued from October 2019 onwards with the computer generated DIN duly quoted in such communication. Major citizen friendly initiatives. Aykar Seva Kendra. The setting up of Aykar Seva Kendra is a step in the direction. Aykar Seva Kendra is a single window system for implementation of Citizens Charter of the Income Tax Department and mechanism for achieving excellence in public service delivery. All communication as well as returns received in Aykar Seva Kendra mandate timely disposal, which can be monitored and reviewed at the highest level. Aykar Setu. The use of smartphone is increasing day by day with the objective to enhance taxpayer services and mobile access experience. A mobile app available on Android or iOS platform and responsive version of the taxpayers services TPS section at the national website called Aykar Setu was launched. TDS SMS alert scheme. CBDT, Central Board Direct Taxes, has put in place a mechanism for real-time communication to taxpayers, dedicates about information of TDS deduction or deposit by their respective employers or deductors. In order to provide better taxpayer services, by providing timely and accurate data to the taxpayers, the scheme for SMS alert to the salaried employees on a quarterly basis has been launched. Publicity campaigns. For the last many years, the department has shifted its communication strategy to portray itself not as a purely enforcement agency but also as a taxpayer facilitator, service provider, and major contributor in nation building. This strategy has allowed the department to communicate effectively with the taxpayers, acknowledging their contribution in building a secure, progressive, and developed nation. Several publicity campaigns were carried out, which included campaigns for awareness of due dates of payments of advance tax, filing of returns, filing of TDS statements and issuance of TDS certificates, filing of annual information returns, etc. Social media. The department has stepped into publicity campaigns through social media channels since 2015 as per the approval social media policy. As per the approved social media policy. Social media activities are also being regularly undertaken through the official Twitter account, that is Income Tax India, hashtag Income Tax India. This strategy has allowed the department to communicate effectively with the taxpayers, acknowledging their contribution in building a secure, progressive and developed nation. Central Board of Indirect Taxes and Customs. Central Board of Indirect Taxes and Customs CBIC, erstwhile Central Board of Excise and Customs, is a part of Department of Revenue. It deals with the task of formulation of the policy concerned levy and collection of the customs, central excise duties, central goods and services tax and IGST, prevention of smuggling and administration of the matters relating to customs, central excise, central goods and services tax, IGST and narcotics to the extent under CBIC's purview. Dispute settlement and appeal. The officers of customs, excise and service tax have powers to adjudicate cases under the Custom Act 1962, the Central Excise Act 1944, Service Tax Laws, Finance Act 1994. The appellate machinery comprising the Commissioner's appeals deals with appeals against the orders passed by the officers lower in the rank than Commissioner of the Customs and Central Excise. International cooperation in tax matters. India's association with OECD. The Organization of Economic Cooperation and Development, OECD, is an organization of 34 member countries who are signatories of the Convention on the Organization of Economic Cooperation and Development. Tax issues have always been an important part of OECD's overall activities and are undertaken by the Committee on Fiscal Affairs and its subsidiary bodies. The Indian delegates have been participating in the meetings of the working parties and task force in view of the prominent role of OECD in development of international standards in the areas of international taxation, transfer pricing and exchange of the information. Tax Inspector Without Borders, TIWB. India has been supportive in capacity building in tax matters in developing countries. The Tax Inspector Without Border TIWB program has been jointly launched by UNDP, United Nations Development Programme and OECD, and is intended to support developing countries to strengthen national tax administrations through building audit capacity and to share this knowledge with other countries. Customs. Indian customs has always been at the forefront when it comes to adopting cutting edge technology for providing better services in respect of both cargo and passengers. The policy adopted by customs is directed towards the twin goal of Make in India and Atmanirbhar Bharat. The tariff structure has been calibrated so as to achieve furtherance of economic activity and employment generation in the domestic market. Enterprise Data Warehouse CBIC is one of the first government departments to have implemented an enterprise data warehouse, a central repository of clean and consistent and near real-time data pertaining to custom, central excise and service tax. Enterprise Data Warehouse CBIC is one of the first government departments to have implemented an enterprise data warehouse, a central repository of clean and consistent and near real-time data pertaining to customs, central excise and services tax. Directorate of Enforcement ED. Directorate of Enforcement or Enforcement Directorate was set up at New Delhi in 1956 for enforcement of the provisions of the Foreign Exchange Regulation Act FERA 1947. FERA 1947 was later replaced by Foreign Exchange Regulation Act 1973. FERA was a criminal act which provided for filing of prosecutions in a court of law. Beside education of violation by the educating authorities, FERA was replaced in 2000 and replaced with Foreign Exchange Management Act (FEMA). Subsequently, the Directorate was also entrusted with the responsibility of implementing the Prevention of Money Laundering Act 2002 (PMLA). Under the Prevention of Money Laundering Act (PMLA), the Directorate can initiate investigation only after a law enforcement agency books a case under one of the offences listed in the schedule to the Act. Financial Intelligence Unit India. Financial Intelligence Unit India. FIU India. Financial Intelligence Unit India (FIUIND) is the central national agency for receiving, processing, analyzing and disseminating information relating to suspect financial transactions. Narcotics Control. The Narcotics Control Division administers the Narcotics, Drugs and Psychotropic Substances Act 1985, 61 of 1985, which prohibits, except for medical and scientific purposes, the manufacture, production, possession, sale, purchase, transport, warehouse, use, consumption, import, interstate, export, interstate, import into India, export from India, or transshipment of narcotic drugs and psychotropic substances. Central Bureau of Narcotics. The Central Bureau of Narcotics (CBN), headed by the Narcotics Commissioner, is headquartered at Gwalior, MP. The administrative control of the department lies with CBIC, Central Board of Indirect Commission (CBIC), while its operational functions are monitored by the Department of Revenue, the Doodle Department entrusted with the task of the policy decision over control over narcotic drugs, psychotropic substances and precursor and essential chemicals used in manufacture of the narcotic drugs and psychotropic substances (NDPS). Government Opium and Alkaloid Factories. The Government Opium and Alkaloid Factories (GOAF), under the administrative control of the Department of Revenue, are engaged in the processing of raw opium for export purpose and manufacture of opiate alkaloids. Custom Excise and Service Tax Appellate Tribunal. Custom Excise and Service Tax Appellate Tribunal, earlier known as Custom Excise and Gold Control Appellate Tribunal, was formed as a quasi-judicial body to hear appeal from orders and decisions passed by the Commissioner or Commissioner Appeals of Customs, Central Excise and Service Tax. The tribunal is also having appellate jurisdiction on anti-dumping matters, and such matters are heard by a special bench headed by the President, CESTAT. Department of Financial Services. The Department of Financial Services (DFS) is mainly responsible for policy issues relating to public sector banks, PSBs and financial institutions, including their functioning, appointment of chairman, managing director and chief executive officer, MD or CEOs, executive directors, EDs, chairman cum managing directors, CMDs, legislative matters, international banking relations. Banking industry is crucial to the economy of any nation as it channels savings and investment to provide capital for economic growth. In India, banks have played a vital role in financial inclusion of the general population by providing access to basic financial services to unbanked households and formal credit to the agriculture sector and micro enterprises. Public sector banks are the mainstay of the Indian banking industry. PSBs and PSB sponsored regional rural banks (RRBs) have dominant market presence and constitute 78% of the bank network. of scheduled commercial banks. Public sector banks are the mainstay of the Indian banking industry. PSBs and PSB-sponsored regional rural banks have dominant market presence and constitute 78% of the bank network of the scheduled commercial banks. Reserve Bank of India. RBI. The RBI is India's central banking institution which controls the monetary policy of the Indian rupee. It commenced its operation on April 1, 1935 in accordance with the Reserve Bank of India Act 1934. Following India's independence on 15 August 1947, the RBI was nationalized on January 1, 1949. As the Central Bank of India, RBI is an independent apex monetary authority which regulates banks and provides important financial services like storing of foreign exchange reserves, forex, control of inflation and monetary policy report. It is a member bank of Asian Clearing Union. The general superintendence and direction of the RBI is entrusted with the 21-member Central Board of Directors, which has the governor, 4 deputy governors, 2 finance ministry representatives, 10 government nominated directors to represent important elements of India's economy, and 4 directors to represent local boards headquartered at Mumbai, Kolkata, Chennai and New Delhi. National Bank for Financing Infrastructure and Development. The Government of India has introduced the National Infrastructure Pipeline, a first of its kind exercise with a focus on sectors such as energy, roads, urban infrastructure and railways, and covering all projects greenfield and brownfield. Therefore, National Bank for Financing Infrastructure and Development NABFID has been established as a unique development financial institution exclusively for infrastructure reforms in banking sector. As per RBI, reasons for the spurt in stressed assets in India in recent years include, among others, aggressive lending, loan fraud, and willful default in some cases. To address the problem, in December 2015, the government implemented a comprehensive 4Rs strategy of recognizing NPAs transparently, resolution and recovery, recapitalizing PSBs, and reforms in the financial system and PSBs. Consolidation of public sector banks. The consolidation of PSBs aims at enhancing the efficiency or efficacy of the banking sector by creating strong and efficient banks. By leveraging economies of scale and synergies, the amalgamated entities have improved their financial capacity to support economic growth by lending and operational efficiencies through increased thrust on the adoption of technology. It improved their ability to raise funds from the market. 98% of resources raised from the market by PSBs, public sector banks, in financial year 2020-21 has been by amalgamated entities. Digital and data-driven banking reforms in PSBs, public sector banks, have led to substantial headway in introducing digital and data-driven banking. First, enhancement of access to mobile and internet banking by PSBs, enablement of digital retail loan request initiation through digital channels in all large PSBs, implementation of government's Jeevan Pramaan initiative for pensioners to enable them to update their annual life certificate online, etc. E-Rupee. The digital payment solution E-Rupee, a cashless and contactless instrument for digital payment, was launched in 2021, which is going to play a substantial role in making direct benefit transfer DBT more effective in digital transactions in the country and will give a new dimension to digital governance. The digital payment solution E-Rupee, a cashless and contactless instrument for digital payment, was launched in 2021, which is going to play a substantial role in making DBT, direct benefit transfer, more effective in digital transaction in the country and will give a new dimension to digital governance. EDRT project. The EDRT project to digitize the functioning of 39 debt recovery tribunal, all 39 debt recovery tribunal DRTs, and 5 debt recovery appellate tribunals DRAYS, has been implemented with the support of the National Informatics Center NIC. The EDRT project has automated the full cycle of workflow of DRATs and DRTs, which has brought transparency and increased their efficiency. It has enabled the tribunals to ensure online availability of case-related information. Doorstep banking. Apart from digital banking through net or mobile banking and other electronic channels, PSB started doorstep bankings as a part of enhanced access for service excellence ease reforms in 100 centers to provide the convenience of banking services to the customers at their doorstep through the universal touchpoints of call center, web portal or mobile app. Regional rural banks. The regional rural banks RRBs were established under the Regional Rural Bank Act 1976 to create an alternative channel to the cooperative credit structure and to ensure sufficient institutional credit for the rural and agricultural sector. RRBs are jointly owned by Government of India, concerned state government and sponsored banks with the issue capital shared in the proportion of 50%, 15% and 35% respectively. RRBs are jointly owned by Government of India, concerned state governments and sponsor banks with the issued capital shared in the proportion of 50%, 15% and 35% respectively. 50% Government of India, state government 15% and sponsor bank 35%. Agriculture credit. In order to boost the agriculture sector with the help of effective and hassless free agriculture credit, the government has been fixing annual targets for ground level agriculture credit by scheduled commercial banks, regional rural banks and cooperative banks. Kisan Credit Card. The Kisan Credit Card KCC scheme was introduced in 1998-1999 as an innovative credit delivery system aiming at adequate and timely credit support from the banking system to the farmers for their cultivation needs, including purchase of inputs in a flexible, convenient and cost-effective manner. The scheme is being implemented by all cooperative banks, RRBs, regional rural banks and public sector commercial banks throughout the country. Rural Infrastructure Development Fund. Rural Infrastructure Development Fund. The central government established a fund to be operationalized by NABARD, namely the Rural Infrastructure Development Fund RIDF, which was set up within NABARD by way of deposits from scheduled commercial banks operating within the country from the shortfall in their agricultural or priority sector or weaker section lending. The fund has since been continued, with its allocation being announced every year in the union budget. Over the year, coverage under the RIDF, Rural Infrastructure Development Fund, has been broad-based in each tranches and at present a wide range of 34 activities are financed under various sectors. Insurance. Insurance, being an integral part of financial sector, plays a significant role in India's economy apart from protection against mortality, property and casualty risks and providing a safety net for individuals and enterprises in urban and rural areas. This sector encourages savings and provides long-term funds for infrastructure development and other long gestation projects of the country. Life Insurance Corporation of India (LIC). Life Insurance Corporation of India (LIC) was established by an Act of Parliament called the Life Insurance Corporation of India Act 1956. It is governed by the Insurance Act 1938, LIC Act 1956, LIC Regulation 1959, and Insurance Regulatory and Development Authority Act 1999. Social Security Scheme Atal Pension Yojana. The Atal Pension Yojana APY was launched in May 2015 to address the longevity risk among the workers in organized sector who are not covered under any statutory social security scheme. The APY Atal Pension Yojana is focused on all citizens in the unorganized sector who join the National Pension System NPS administered by the Pension Fund Regulatory and Development Authority PFRDA. Any Indian citizen between 18 to 40 years of age can join through their saving bank account or post office saving account. Minimum pension is guaranteed by the Government of India to the subscriber at the age of 60 years with a minimum monthly contribution. After the subscriber's demise, the spouse of the subscriber shall be entitled to receive the same pension amount as that of the subscriber until the death of the spouse. After the demise of both the subscriber and the spouse, the nominee of the subscriber shall be entitled to receive the pension wealth as accumulated till age 60 of the subscriber. Pradhan Mantri Jeevan Jyoti Bima Yojana. Government announced three ambitious social security schemes pertaining to the insurance and pension sectors, namely Pradhan Mantri Jeevan Jyoti Bima Yojana (PMJJBY), Pradhan Mantri Suraksha Bima Yojana (PMSBY), and the Atal Pension Yojana (APY) to move towards creating a universal social security system targeted especially for the poor and the underprivileged. PMJJY Pradhan Mantri Jeevan Jyoti Bima Yojana is a one-year life insurance scheme renewable from year to year, offering coverage of 2 lakhs for death due to any reason and is available to people in the age group of 18 to 50 years, life cover up to 55 years of age, having a bank account who give their consent to join and enable auto debit. It involves convenient bank accounts linked enrollment with implementation in IT mode and premium payment through auto debit from the bank account of the subscriber. Pradhan Mantri Suraksha Bima Yojana. Pradhan Mantri Suraksha Bima Yojana (PMSBY) is a one-year personal accident insurance scheme renewable from year to year, offering coverage for death and disability due to an accident and is available to people in the age group of 18 to 70 years having a bank account who give their consent to join and enable auto debit. Under the said scheme, risk coverage available will be 2 lakh for accidental death and permanent total disability and 1 lakh for permanent partial disability. It involves convenient bank account linked enrollment with implementation in IT mode and premium payment through auto debit from the bank account of the subscriber. Pradhan Mantri Jan Dhan Yojana, with a view to increasing banking penetration and promoting financial inclusion, and with the main objective of covering all households with at least one bank account per household across the country, a national mission on financial inclusion named as PMJDY Pradhan Mantri Jan Dhan Yojana was announced in 2014. Objective of PMJDY include universal access to banking facilities for all households across the country through a bank branch or a fixed point business correspondent BC within a reasonable distance, and to cover all households with at least one basic bank account with RuPay debit card having inbuilt accident insurance cover of 1 lakh rupees. National Pension Scheme. With a view to providing adequate retirement income, the National Pension System (NPS) was introduced. It has been made mandatory for all new recruits to the government except armed forces. The features of the NPS National Pension System designed are self-sustainability, portability, and scalability based on individual choice. It is envisaged as a low-cost and efficient pension system backed by sound regulation. As a pure defined contribution product, returns would be totally market driven. The NPS National Payment System provides various investment options and choices to individuals to switch over from one option to another or from one fund manager to another, subject to certain regulatory restrictions. Swavlamban scheme to encourage the workers in the unorganized sector to save voluntary for their old age. An initiative called Swavlambam scheme was launched in 2010 to encourage the workers in the unorganized sector to save voluntarily for their old age. An initiative called Swavlamban scheme was launched in 2010. It is a co-contributory pension scheme whereby the central government contributes a sum of rupees 1000 rupees per annum in each NPS account opened, having a saving of rupees 1000 to 12,000 per annum. Rural Housing Fund. The Rural Housing Fund was set up in 2008-2009 to enable primary lending institutions to access funds for extending housing finance to targeted groups in rural areas at competitive rates. Pradhan Mantri Mudra Yojana. There are a large number of small business units estimated at around 5.77 crore in the informal sector running small manufacturing, trading or service businesses who find it difficult to access formal systems of credit. The loan requirement of these units is generally below 10 lakh rupees. Micro Units Development and Refinance Agency Limited Mudra is a refinance institution set up by the government for development of micro units by extending funding support to encourage entrepreneurship in India, mostly from non-corporate small business sector. Under the guidelines of PMMY, Mudra has launched 3 innovative products, namely Shishu, Kishore and Tarun, which signifies the stage of growth and funding needs of the micro units or entrepreneur. Mudra Cell refinance through state level institutions, NBFCs, MFIs, microfinance institutions, regional rural banks, nationalized banks, private banks and other intermediaries. Credit Guarantee Fund for Skill Development to guarantee the loans and advances up to 1.5 lakh term loan or any other limit as may be decided by the settler, sanctioned and disbursed by the lending institutions without any collateral security and or third party guarantees. Department of Investment and Public Asset Management. The Department of Disinvestment and Public Asset Management (DIPAM) is one of the departments under Ministry of Finance. The mandate of the department includes all matters related to management of central government investments in equity, including disinvestments of equity in central public sector undertakings, decision on the recommendation of the administrative ministries, Niti Aayog, etc. for disinvestment, including strategic disinvestment, all matters related to independent external monitors for disinvestment and public asset management and financial policy in regard to the utilization of the proceeds of disinvestment channelized into the National Investment Fund. New Public Sector Enterprise Policy. The New Public Sector Enterprise Policy (PSE) was designed to discover true economic potential of entities in the hands of private investors. The New Public Sector Enterprise Policy was designed to discover true economic potential of entities in the hands of private investors. Under the new PSE policies, the public sector commercial enterprise have been classified as strategic and non-strategic sectors. A strategic sector delineated are based on the criteria of national security, energy security, critical infrastructure, provision of financial services, and availability of important minerals. The four broad strategic sectors have been proposed as atomic energy, space and defense, transport and telecommunication, power, petroleum, coal and other minerals, and banking, insurance and financial services. Framework for asset monetization. Framework for asset monetization. An institutional framework for monetization of non-core assets led by DIPAM was also approved in 2019. The framework covers monetization of identified non-core assets of CPSEs under strategic disinvestments, immovable enemy property under the custody of custodian of enemy property CEP MHA. Framework for asset monetization. An institutional framework for monetization of non-core assets led by DIPAM was also approved in 2019. The framework covers monetization of identified non-core assets of CPSEs under strategic disinvestment, immovable enemy property under the custody of custodian of enemy property CEP 1, Ministry of Home Affairs. Bharat Bond. Bharat Bond Exchange Traded Fund ETF was launched in 2019, which was the first instrument of its kind based on high quality public sector bonds. The second tranche was launched in 2020. The two tranches received huge response from all sections of the investors, especially retail investors. National Investment Fund. Government constituted the National Investment Funds, into which the proceeds from disinvestment of central public sector enterprise were to be channelized. The corpus of NIF, National Investment Fund, was to be a permanent nature, and NIF, National Investment Fund, was to be professionally managed to provide sustainable returns to the government without depleting the corpus. Thank you very much.